You know the rules. Risk only 1% per trade. Wait for your setup. Cut losses quick. Let winners run. You've read them 1,000 times, maybe even written them down and stuck them on your monitor. Yet when gold breaks out and you're scared of missing the move, those rules vanish. When your euro-dollar position hits your stop and you're convinced it'll reverse, you hold anyway. When you're down for the week and desperate to get back to break even, suddenly you're risking 3% on a setup you'd normally skip. Knowing what to do means nothing when you can't actually do it under pressure. Millionaire traders aren't smarter than you. They don't have better strategies or insider information. They've just built something you haven't, a system that forces them to follow their rules even when every emotion is screaming to break them. What I'm about to reveal are the 3 practical methods they use to make discipline automatic instead of optional. Build friction. Millionaire traders know willpower fails under pressure, so they engineer their trading setup to make rule-breaking physically difficult. When temptation hits, friction gives them enough time for rational thinking to catch up with emotional impulses. The harder it is to make a bad decision, the less often they make bad decisions. Here's a simple example. One trader keeps his trading capital in a separate account that requires 2-factor authentication and a 5-minute transfer process to access additional funds. When he's tempted to revenge trade with bigger size after a loss, those 5 minutes of waiting let the emotional surge pass. The inconvenience isn't accidental. It's designed protection against his own impulses. Another trader uses position sizing calculators that require him to input his stop-loss distance before showing him his position size. He can't just feel out how much to risk based on confidence. The calculator forces him to define his risk before his emotions can inflate it. This extra step creates friction that prevents position sizing mistakes during emotional moments. The concept extends to setup selection. Traders who struggle with overtrading create checklists they must physically complete before entering trades. Not mental checklists they can skip, but actual forms they fill out and save. The annoying process of documentation makes them think twice about marginal setups. When a trade requires 10 minutes of paperwork, you suddenly become very selective about which trades deserve that effort. Physical. Friction works because you're emotional. Brain wants instant gratification while you're rational. Brain needs time to process information. By inserting delays, requirements, and obstacles between impulse and action, you create space for better judgment to override worse instincts. The goal isn't making trading harder. It's making bad trading harder while keeping good trading straightforward. Understanding friction prepares you for the second method that removes the hardest discipline challenges entirely. Remove decisions during trades. The biggest discipline failures happen during open trades when your money is moving and emotions are running hot. Millionaire traders solve this by making every important decision before entering the trade, leaving nothing to figure out while under pressure. Once they're in a position, they're just executing a predetermined plan, not making judgment calls. Before clicking buy, they know exactly where their stop goes. Not approximately exactly. They know their profit target or trailing stop strategy. They know their position size down to the decimal. They know what market conditions would make them exit early. Every scenario has a planned response written down before emotions enter the picture. This pre-planning eliminates the internal debate that destroys discipline. You're not asking yourself, should I move my stop? While watching your position bleed. You decided before entry that stops don't move, period. You're not wondering, should I take profits here? When you're up nicely. You decided your exit criteria 3 days ago when you were thinking clearly. The trade becomes mechanical execution of a plan you made when you were calm. Some traders take this further by using bracket orders that automatically place stops and targets the moment their entry fills. The market executes their plan for them, removing the temptation to interfere. Others write out their trade plan in a journal before entering, creating a written contract with themselves they can reference when emotions surge. The power comes from understanding that discipline isn't needed when there's nothing to discipline. If every decision is already made, you're just following instructions rather than exercising willpower. You can't break rules that don't require judgment calls. This approach transforms trading from constant psychological battle into simple plan execution. But pre-planning only works when combined with the third method that makes rule following feel natural. Track process, not results. Millionaire traders measure their success completely differently than struggling traders. While amateurs obsess over daily profit and loss, professionals track how well they followed their rules, regardless of whether those trades made money. This shift makes discipline self-reinforcing instead of dependent on market validation. Here's how it works. After each trading day, they score themselves on execution quality. Did they follow their entry criteria exactly? Did they honor their stops? Did they stick to their position sizing rules? Did they avoid trading outside their system? Each of these gets a yes or no, creating an execution score that has nothing to do with whether they made money. A trader might lose money on 3 trades but score perfect execution if those losses came from following the plan exactly. That's a successful day worth celebrating. Another trader might make money but score poorly if they moved stops, oversized positions, or took trades outside their criteria. That's a failed day requiring correction, despite the profits. This tracking completely changes your relationship with discipline. Following your rules becomes the goal, and you get immediate feedback on whether you achieved that goal. You're not waiting weeks or months to see if your approach works. You know instantly whether you executed well, giving you daily wins that build confidence in your discipline, rather than your predictions. The practical application involves simple spreadsheets or journals where you record rule adherence separately from financial results. Over time, patterns emerge. Maybe you follow your rules well in the morning but break them in the afternoon, suggesting you should stop trading after lunch. Maybe you execute perfectly on certain setups but get sloppy on others, suggesting you should focus on setups that match your psychology. Professional tracking reveals that discipline and profitability are connected but not identical. You can have perfect discipline during a losing week because your system hit temporary variance. You can have profitable weeks with terrible discipline because you got lucky breaking your rules. Tracking process helps you optimize the only variable you control, your behavior. Results will take care of themselves when behavior becomes consistent. The ultimate benefit is that process tracking makes discipline feel achievable. Making money feels out of your control because markets are unpredictable. Following your rules is completely in your control because it's just behavior. When you measure what you control, you build confidence through repeated success rather than waiting for the market to validate you. Comment below which method you'll implement first: building friction, pre-planning decisions, or tracking process instead of results. Because building unshakable discipline isn't about trying harder or wanting it more. It's about engineering your trading environment to make good decisions easy and bad decisions difficult. Millionaire traders understand that willpower is unreliable under pressure, so they build systems that work even when willpower fails. Master these 3 practical methods, and you'll discover that discipline stops being a constant struggle and starts being the natural result of good systems. Your instinct will be to rely on self-control and determination, but the real edge comes from making discipline automatic through smart design.